Hello and welcome to another lesson. So in this lesson, we are going to look at the definition of forex as we continue. So what is forex? Forex is a decentralized platform that allows you to trade various assets for profit, and these assets include commodities like oil. Like oil. Yeah, I think oil is a commodity. These assets include metals like gold, silver, copper. These assets also include currencies like the euro, dollar, the Dutch mark, the British pound, Thai baht, Kenyan shilling. What other assets? Canadian dollar, Bitcoins is also an asset, and indices is also an asset. So Forex is just a combination of all those things. Actually, in this era, I've seen all those things that you can trade all these assets on Forex if you join Forex. Now, Forex is the largest market in the globe with about 6 trillion. Actually, right now, currently 6 trillion, not 5.3, but $6 trillion. There is about $6 trillion worth of transactions being traded daily in the forex market. So it's the largest and most liquid market in the world, and that is why so many people are diverting into forex because of the liquidity that is inside the forex market. It has a lot of liquidity and it has a lot of potential to make you large profits. Like if you look at the I think you should Google that. If you look at this, there's this famous forex trader by the name George Soros. He's a forex billionaire. He's among one of the forex billionaires in the world. Uh, there was a time he made $800 million by trading the Thai baht when there was a crisis in that country. Now, this is a person who lives in the United States of America, but he was able to profit from a crisis in a country that he has probably never been. There was also this story where he was able to generate, I think, $60 million in about 3 days, or I think it was 72 hours. I can't remember, but you can just follow the story of George Soros. So, forex trading is very lucrative. It just depends on the knowledge you have. If you have good knowledge on forex trading, of course, you're going to make a lot of money. And George Soros is not the only billionaire who has made a fortune from forex trading. We have the likes of Warren Buffett, who has also made a fortune from forex trading, and so many others. So I won't go into that. Now, with forex, we have the major currencies which are the most traded pair currencies. So the trade in forex occurs between two currencies because one currency is being bought against another currency and sold at the same time. So if you look at this example here, we have two pair currencies. We have the euro versus the USD. And if you look at the chart here, we have the selling price, which is also called the bid, and the buying price. Actually, we have the selling price. I think the selling. Okay, so bid and also the buying price, which is ask. So these two pair currencies, they have a price quote. So if you look at this price quote of 1.2302 and 1.2304, there's a spread of 2 pips in between this price quote. Okay, so that is basically how forex trading works. You buy one currency against another and also sell one currency against another depending on the fluctuation in the currency market. So I think I'll have to give you a practical demonstration of that in the next lesson. So we are going to cover that. So no worries about that. I'm going to show you how exactly it works and how exactly you are able to make money, because I can't tell you in words, or rather I can't tell you without showing you a demonstration, because you won't really understand what's happening there or how you're able to make money by trading forex. So I'm going to show you that. Okay, but here you can see that we have that example of pip that I was talking about, how to calculate pips. So if you want to calculate pips, you're supposed to do you're supposed to minus 1.2304 minus 1.2302 to get the number of pips, which is 2. Now, anytime you open a trading position in the market, every time when the trade goes in your favor, your profits will grow in pips. So if you get 2 pips, for example, assuming that the value of 1 pip is $1, if you get 2 pips, you'll have $2. If you capture 10 pips, you'll have $10. If you capture 50 pips, you'll have $50. If you capture 1,000 pips, you'll have $1,000. So that's basically how it works. It's measured in pips. The profits are measured in pips, but when you withdraw, you can withdraw in dollars. But those are just one of the terminologies that you need to learn about when you are venturing into Forex trading. So you can see here the fourth point, the fourth unit after the decimal point, which is the smallest unit of an exchange rate. That is what we mean by a pip. A spread is the difference between the sell quote and the buy quote in pips. Okay, so that is just an extension of what we were talking about earlier about spread and pips. So always remember this: a pip is the fourth unit after the decimal point, which is the smallest unit of an exchange rate, while the spread is the difference between the sell quote and the buy quote. So that is just what you need to learn about pip and spread. So we are going to talk about how to calculate pips and spreads, how to calculate pips and spreads as we continue with the lesson. So in the next lesson, we are going to talk about how to read currency pairs, and of course, I'm going to show you exactly how you can make money on Forex through the fluctuations of the currency pairs in the Forex market. But in the next lesson, we're going to talk about how to read currency pairs. But that's it for today's lesson. I'll see you in the next lesson, and goodbye.